the beginning stages, what I'm seeing right now is the escalation of premiums that are up over the last couple of weeks. I would argue minimum of 50 or 60 cents an ounce. So we've already seen a 3 or 4% increase in premiums in the last week or two.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. As we are rounding up 2020, coming into the holiday season, of course, what better holiday gift than some silver? If anyone wants to send me silver, I'll be happy with that as a present. Andy, I got your kind silver gift that I have on the line with me, as always, Andy Schectman of Miles Franklin, who sent me a really nice coin the other day. Andy, great to have you here. Maybe you could tell folks about the one you sent over.
It was a World War II commemorative 75th anniversary Silver Eagle. And the gold and the Silver Eagle that were issued proof coins by the Mint commemorating the end of World War II have ballistic demand behind them. And the premiums on them are unlike anything I've ever seen. In fact, dealers are paying north of $700 for the silver coin, and the gold coins are several $1,000s a piece. And I was taken back by it. In fact, when someone asked me about it, I said that can't be, and sure enough, it is. So there is a large demand out there, I guess, for collectible coins. I more so than I would have given credit for. So that's what that is. And I don't know how many were made by the Mint, but suffice it to say, it must not be very many. I believe they sold out in less than an hour when they came online. So the difference between a proof coin, for your listeners, and a regular commercial strike coin, a proof coin is struck 3 times. First, it's polished under an industrial buffer for greater shine and sheen, and then it is stamped 3 times for greater definition, and then put in a fancy box. And in this case, because it is commemorating the end of World War II, was a limited edition and one that has a price tag attached to it that I'm not used to seeing anything coming out of the U.S. Mint these days. So Merry Christmas and Happy Holidays to you, Chris, and to all the listeners out there. And it is the very least I can do as a very small token of my appreciation of our friendship and all that you have done for me. And I hope to be able to give you many more of those types of things moving forward as silver continues to roar higher in price.
Well, thanks again for sending that kind note that you included there too. I actually put in the meditation room in my new home here in Austin. So while I sit there, reflect on the silver market, nice actually having more time and changing my schedule so there's more time to actually just stop and reflect on these things, because I think the information's great, and I know a lot of us silver junkies, we love our data and everything, but just being able to take a step back and see things from the bigger perspective. I would say if there's anything I've hoped to pass along to people this year is just accepting what we can change. I mean, silver is going to go when it goes. And if sometime farther from now, then you can buy silver cheaper. If it goes tomorrow, then your silver will be revalued sooner, and just accepting that. So the holiday season rolls around. That's something I'm grateful for. And Andy, everything you said there, I already have like 7 questions written down. So many interesting things you touched on, although perhaps to dig in. First of all, you mentioned the premiums are tightening again. Can you give us an update on the premiums and what are people actually buying or selling? What specific coins?
Sure. Well, first I'll mention that it looks like if we take an opposite look at the opposite end of the spectrum, it looks like COMEX will have delivered somewhere in the neighborhood of 330 million ounces of silver this year. So I'd like just to make a brief mention that at the very, very top of the food chain, this group that has been called the others, that arguably are sovereign wealth funds and family offices and very, very, very wealthy. And I would really like to underscore in the know people. When you're talking that strata of wealth, typically you probably know the people that are making policy or people that are pulling strings. 330 million ounces pulled off of COMEX this year. That's an extraordinary amount of silver. That's more than we've ever seen, ever pulled off of COMEX. So there's demand for silver. That's first and foremost. And what we saw earlier in the year, Chris, with $12 silver, when typically when we look at some sort of a market meltdown, what we've seen the last two times that happened, '08 and here in 2020, silver reacts negatively and falls down. Gold seems to retain its realm or its power as a monetary metal, but after things calm down, like in '08, on its way up to $50, and like now from 12 shooting up to 30, pulling back and resting in the mid 24s now, what you see is silver consolidates and then typically catches up with and surpasses gold. So with that in mind, we saw $12 silver in March. Premiums go up to $20 or $30. Excuse me, the price of silver go up to $30. When it was at 12, you couldn't buy anything for under 20. Typically was associated with a delivery delay. And so you're seeing that here again now. We are seeing a price that pulled back, just like we saw in '08, and then it's beginning to move back up again. It hit 30, it's consolidating, and I think it'll move back up again. And when we take a look at the amount of silver that was pulled off of COMEX this year, the 330 million ounces or thereabouts, there is massive demand. And that demand, I believe, is beginning to filter its way down into the physical market. We are beginning for the first time since Thanksgiving, where premiums, I would argue, bottomed, turn back around and move up. And all of the online companies and all of the companies that I watch, their premiums are beginning to rise. That means that the suppliers that they're buying them from, the mints and the mines, the mints and the refiners, are beginning to raise their premiums as well, which I can tell you is true. And typically when we talk about items that this is going to center around, it is or are the coins issued by the governments. The Maple Leaf, the Eagle, Krugerrand, the Britannia, the Philharmonic, those coins, and the Kangaroo, those 6 coins will typically be the ones that are going to see the premium rise first and foremost. So we're beginning to see, I think, the media and the mainstream to wake up to silver as a legitimate place to park your money, because it offers upside potential, and it offers the things that we like when we talk about precious metals, namely privacy and flexibility. But here again, there are very few things that you can buy that are priced half of what they were in 1980. It offers you unusual upside potential in an environment where stocks, bonds, and real estate are massively overvalued. So I think you're going to see money realize that silver is a very, very good place to place your money. And when that happens, that's when we see the battle take place between the industrials and the investors. And that's where the octane comes in, and we see silver really, really take off. But the beginning stages, what I'm seeing right now, is the escalation of premiums that are up over the last couple of weeks. I would argue minimum of 50 or 60 cents an ounce. So we've already seen a 3 or 4% increase in premiums in the last week or two. That tells me we're going to see much higher premiums moving forward. That's usually how it works.
Well, Andy, I appreciate you sharing that. Again, I might add the kind of information about the physical silver market you can only get on Andy James Bond Schectman's weekly silver and gold physical market update, which you can find here every Saturday at Arcadia Economics. Andy, you mentioned there a couple times the U.S. Mint. Can you give us a little more color on what's going on with them? Just to elaborate on what you were saying there regarding the Mint.
Well, there hasn't been a lot of information out of the U.S. Mint lately, to be honest with you. It's been quiet and calm, and that was one of the things I was thinking about before we got on our call today. You know, Chris, we've talked about an awful lot over the last, several months, talking once a week. And one of the things that has been interesting to me is that it seems that just about every time we talk, there's something new to talk about. And I would simply say to you right now that it's eerily quiet. There's not a lot of news that we haven't talked about. The U.S. Mint isn't running out of supply. The 2021s we've been able to order already. I would note that they required the main distributors to first tell them how many more 2020s they wanted before they would allow them to buy 2021. So we've been in this consolidation pattern. After silver hit 30 bucks, we've consolidated down. And with that consolidation, and with Bitcoin and the stock market doing well here again, people are too focused on the immediacy of the news, Chris. They have to see the big picture. And a lot of times they don't. And so the distributors, as demand slowed down when it should have really accentuated into the election, few of the big distributors didn't place large orders for 2021s because they would have had to buy more 2020s at the same time. Anyways, bottom line is, other than that, where some of the big primary distributors are very, very low on Silver Eagles, I would argue that the Mint has plenty right now. And there hasn't been a whole lot coming out of the Mint. Remember, we get new designs on Silver Eagles for 2021 after it being the same design since 1986, making both the 2020 and the 2021 desirable. I guess I would like to just say this, and while this isn't new, I've not really talked about this too much with you. Really, since 2007, I have seen, at that time, in 07, most of the major mints ran out of product. And that was the first time I'd really ever seen it, where in the late summer of 07, we started seeing mints run out of product early. In 08, with the market phenomenon, they all ran out of product in July, August, most of them not reopening until the end of the year, including the Perth Mint and the Rand Mint, which were totally shut down the second half of the year, and the others 12 to 18 weeks back ordered. But the point of it is that since 2007, this has been a reoccurring theme where 1 minute the market is flush with supply and there's no news, and the next minute it's gone. And I'd like to draw the analogy in that even when things were very calm and quiet and no one ever looked to precious metals really the way they did to equities or to bonds or to real estate, traditional assets, speaking to the pimple on the elephant, the hard asset crowd, you'd wake up one day in November and boom, everything's gone. Now, you know, the standard response from the distributors were, well, they're out of current year supply. They're producing and boxing up next year's supply. It's kind of the dead zone. And okay, fine. And I always would think, well, geez, you know, that's not real good planning on behalf of the mints when there's not massive demand and they run out of supply just like that. But this has been a reoccurring common theme since 2007 in one propensity to run out of product. They are somewhat the model of inefficiency as it pertains to forward thinking. And I would simply say this, that when you look at the amount of money that's been created this year, when you look at the destruction of the economy this year, when you look at a stock market that by every single metric is as overvalued as it ever has been in human history, or in the history of the US stock market, let me say, rather, when you see interest rates at 5,000-year lows, meaning the bond market at all-time highs, when you see real estate at all-time highs, and you look over at silver at half of its 1980 peak, when it's coming out of the ground at 8 to 1, being priced at nearly 80 to 1, at what point does smart money wake the hell up and just jump in with both feet? Why aren't the really, really, really wealthy people just jumping in with both feet. Now, maybe it is the others on the COMEX that is quietly trying to, without disrupting the entire market and the price, pull off 330 million ounces off the COMEX this year. Maybe they are repositioning quietly. You know, if you jump in too fast, maybe you cut off your nose to spite your face. I don't know, but I'll simply say this, is that when we look at the U.S. Mint, everything is fine right now. But I'm dead serious, Chris. It wouldn't take but one guy like Bill Gates or Jeff Bezos to make a decent sized purchase, and overnight every major mint in the world would be out of product, just like that. And you know, it sounds sensationalizing, but it's not. And I wonder sometimes, I'm sure you have too, why don't people that have the wherewithal see this and realize it? Are they that oblivious to not only what an amazing investment opportunity it is, but to the fact that there are very few alternatives that offer any semblance of this whatsoever? Actually, you can talk about
may I answer that for you, sir?
Yes, please.
I think it's because they haven't read your chapter of the big silver short yet. That's my guess.
Well, maybe that's the case, Chris. But you know what? I would simply argue that has to come. When you talk about hedge funds fighting for market share, looking for a place to put your money with any semblance of value, there are very few places on the planet Earth that I would say offer it the way silver does. And when we look at a U.S. mint right now, along with all the other 5 major mints, the Canadian, the South African, the UK, Austrian, and Australia, you know, that's it. That's your supply chain. And when they run out, it's over. And so, you know, could it be that the tightness that we're beginning to see, the slow rise in premium, with what Andrew Maguire has said, the difficulty obtaining 1,000-ounce bars, to what I've heard on other stations, kilo bars becoming very difficult to get, is it the beginning of the run on physical? Is it the beginning of an awakening heading into 2021? Look, if we realize, first and foremost, Chris, and again, just to finish answering your question, not much is coming out of the U.S. Mint, but very quickly we could find that nothing is coming out of the U.S. Mint. When I say not much, I mean not much news that is noteworthy, but very quickly we can wake up to find it completely and totally gone if something like what we're talking about happens. But you know, I think that that we haven't seen the end of noteworthy information coming out of the major mints, because I do think that the ability to find an asset class that is trading at such attractive metrics is becoming nearly impossible to get or to find. And at some point, the investment community, the big money, wakes up and realizes this. And when that happens, that ignites completely and totally will ignite the industrial side, who quickly realizes that no matter what the price is, even if they have to buy it from competitors, they need to go out and secure it. So I look at what we're seeing right now heading into 2021, and I say this as God is my witness, as the buying opportunity of a generation. I really do. And sometimes I wish I didn't sell it so I could say this and have greater credibility. People wouldn't think I'm talking my book. But I will tell you that nearly every single ounce that I've bought this year has been in silver for myself personally. And I think that it is truly an opportunity of a generation where you're seeing an 80-to-1 nearly ratio between silver to gold, with an 8-to-1 mining ratio. And at what point does that just end? How long can guys like Keith Neumeyer continue to sell silver at an 80-to-1 ratio when they pull it out of the ground at 8-to-1? How long before that regresses to its natural mean? And that's when you see the U.S. Mint run out of product overnight, and all of the other mints run out of product overnight. And that's why someone mentioned last night in our Mugs and Metals panel, where you'd rather be 6 years early than 60 seconds late. And it's easy to say that, you know, unless you're one of the people that's been 6 years early. I certainly have. You have. But when it pops, you realize the significance of that statement. And when you see the big money positioning the way that they have, quietly, slowly, pulling it off of the exchanges, the central banks pulling it home from the bank. Change is happening. I would argue that it is foretelling what is coming next. And as I've said to you now for a very long time, I do believe the market will be defined by an inability to source product moving forward. I've said that now all year long, and I believe it to be true.
Well, Andy, you mentioned the opportunity of a generation. I'll tell you what's the opportunity of a generation is that despite anything about the COMEX or elsewhere, that with the holiday season coming around, how often is it that you can spend money for a gift and be making a great investment decision all at the same time? That's not legal financial advice yet, to the degree, Andy, maybe if you showed up to the missus with some platinum and gold or silver jewelry, or if you wanted to get your friend, well, I mean, you already got your friend Chris some silver, but I think it's a cool gift. And what would you say to people who are looking to get someone a gift, and especially there's a lot of different products out there. Is there any sweet spot in the market now where there's one relatively where the premium's low, or what are some good things for gift ideas?
I mean, for gift ideas, I love proof coins, and because they're really beautifully packaged and presented. The proof coins come in velvet boxes from the U.S. Mint. They're exquisitely packaged. They're very unique. In a world where, finding a gift for people is often incredibly challenging, a proof coin from the U.S. Mint is always going to elicit an amazing response. Also the large 5 and 10 ounce silver coins and the kilo coins. We have quite a few of the kilo. I think they're the Australian Year of the Rabbit. We have some Pamp Swiss kilo bars. These are things that are really beautiful and really neat to look at. Very atypical from what people are ever going to get on an investment. On a gift rather. Sorry. These are things that will stick out. A kilo bar, a kilo Year of the Rabbit coin, a 5 ounce America the Beautiful giant silver quarter, 10 ounce Royal Canadian Mint mega maple leaf. These are things that will stick out, or a proof coin. If I wanted to really give someone something that would really stick out, I would think it would be either the 5 ounce America the Beautiful, the 10 ounce mega maple leaf, the kilo Year of the Rabbit, or a proof coin. Those 4 things, or a kilo bar. Those 4 things are all going to be, depending upon the amount that you want to spend, ranging anywhere from maybe $60 for the proof Silver Eagle up to somewhere in the neighborhood of $1,500–$1,600 for a kilo of silver in the form of a giant silver coin, which is like a huge hockey puck, or a small kilo bar, 32.15 ounces. But I promise you'll be noticed. And I think that's a really killer gift idea, and I'm glad you mentioned it.
And Andy, I heard a rumor that if you leave platinum by your fireplace, that our mutual friend and colleague Maurice Jackson of Proven and Probable may come down your chimney and take care of that and eat your cookies for you. Is that true?
Yeah, Maurice has been way ahead of the rest of the community with his passion for platinum. Has been for a very long time. He also, I will give him props, called the rhodium market well ahead of everyone else. He was calling it, buying it himself at, I don't know, $1,200–$1,300 an ounce, maybe less, before it shot way up. So, here again, the theme is constant. Buy things that are on sale. He was buying rhodium when it's on sale. You look at platinum, it's on sale, and we're buying silver when it's on sale. These are opportunities that, when you look around the investment landscape, are hard to come by. And it's interesting that they get so often overlooked. Remember, this is not about getting wealthy. This is about preservation of wealth. And it's a bonus if you're able to increase it at the same time. Buying silver at these levels, or platinum at these levels, offer exponential increase in wealth. But that's not the reason to buy it. You buy it as because it is wealth. It's been viewed as wealth for thousands of years. And with that being said, if you're able to potentially increase it, fantastic. But yeah, I would think that Santa Claus Maurice Jackson would definitely sniff that out in a minute. And I'm a big proponent of platinum as well. The real big difference being platinum is already very difficult to come by. Premiums are high, or much higher than they are with silver. And it doesn't have the history that silver does as a monetary metal, which, you know, you go back into the Bible, and the word for money and the word for silver are universal in Hebrew. And I'll simply tell you that, you know, silver has probably even a longer history as a monetary metal than gold does. So that's the big delineation for me here. If we're talking about a currency collapse and a currency crisis and problems with the whole new system resetting, while I find great value in platinum, I find equally or better value with a much more rich and robust history with silver.
Yeah, and it's interesting, Andy. I did an episode earlier this week where we were looking at the dollar to gold ratio, which I might add has gone up $12 since yesterday. And I thought it'd be fun to check in with you today on the dollar to silver ratio. This is on the U.S. debt clock. And let's define the calculation here so everybody is clear. The U.S. dollar to silver ratio, year-over-year increase in U.S. M2 money supply divided by the yearly world production of silver in ounces. So I'm going to interpret that as basically for this year, how many dollars are created, how much silver is mined. Skipper, would you like to take a guess at what the U.S. debt clock has as of today's dollar to silver ratio?
I have no idea, other than to say that 26% of every dollar in circulation was created this year, and M1, which is cash and coin, has exploded in the past month. I would think it's fairly significant, but I don't know. Please enlighten me.
Wow, not even a guess. You'd struggle. I was watching actually Steve Young, a clip of Steve Young on Who Wants to Be a Millionaire last night. Big Steve Young fan. And as I'm sitting there with these trivia questions, like, there's got to be a way to make a silver game like this.
All right, how about 200 to 1?
I would say you're not even in the ballpark. Current ratio is $4,442 per ounce, which, to be clear, I am not saying that the price is going to $4,442 per ounce tomorrow or anytime soon, aside from the fact that I just find it interesting that when you look at how much dollars are being created and how much silver is being mined, and just look at a simple fraction, I find it interesting that that comes out to $4,442 per ounce. And, you know, I guess people can make their own conclusions on that one.
Well, let me just follow up with the opposite end of the conservative spectrum. If we realize that over the last 150 years or so, the gold to silver ratio has averaged roughly 42 to 1. If that were the ultimate bullish case for it, right now, if you take gold and call it 1850 and divide it by 42, you got a silver price of $44 an ounce. Silver at bare minimum should be nearly double where it is today, at bare minimum, based upon historical numbers. And when we factor in the massive amount of money creation, more so than anyone ever thought possible in a given year, more and more stimulants in money creation and QE to infinity. Those types of crazy pie in the sky numbers, are they really pie in the sky? Is it any more pie in the sky than the Dow Jones that was 2,100 in 1990 when I started Miles Franklin, to where it is ultimately now at 30,000? I mean, markets go higher than people think possible. And when you talk about hyperinflationary monetary policy, you know, you can throw all preconceived notions and recency bias out the window. Sky's the limit. But that is nuts. I haven't noticed that. I haven't looked to that on the U.S. debt clock, although I've looked at the debt clock before, but I've never looked at that. That's something I'll have to keep a closer eye on. It's very interesting and illuminating, and sheds a light, I guess, Chris, on just what they're doing to our currency. just why it's important to own gold and silver, because it's being destroyed right out from underneath us. When you see how fast those numbers move, like $600,000 a minute or whatever it is, or maybe it's a second, I don't know. The numbers are off the chart, how fast the debt clock is moving, how fast the money creation is happening. These are the reasons why I say this is a buying opportunity of a generation. It truly is. And there are very few things, if anything, that not only give you that type of potential, but also the safety from this type of madness, really.
Yeah, and I know you mentioned pie in the sky numbers. I don't know. I just point out I mean, someone can call it pie in the sky if they want to. I mean, that's just I call it the data. I mean, it's a fraction. I mean, you could say the numbers are. I mean, you know, I don't see where every ounce of silver goes. Although I saw the Silver Institute, they calculated a 318.5 million ounce deficit in 2020. You know, we see what the Fed's balance sheet is doing. And that's one of the things I remember from my time back on Wall Street. Maybe that's where it was helpful being a derivatives trader, because, you know, you see that second level where it's like, okay, it's one thing to say the U.S. is printing a lot of money. Okay, that's true and that's good. But, you know, $1 versus $1 trillion. There's that derivative degree of extent that I feel often gets missed. You know, and I think some of these numbers just point that out, which again, I don't know, I'm not saying that it's going to $4,000 anytime soon, but it's just, you know, when people say like, is it can go from like 24 to 26? I mean, that's not personally why I am holding silver, you know, and then, I mean, also I think it's worthwhile for people to factor in when they do hear price targets. There's another derivative, because it's, okay, what's the price in today's money supply? What's the price when the Fed doubles the money supply next year? Which, Andy, can you really, Andy, given what we've seen in the last year, that Davos is coming up with their theme of the Great Reset, even with the Fed at I think it's 7 or 8 trillion now. I mean, you can't really say for sure that the Fed's not going to double their balance sheet again next year.
Well, they're going to have to continue to you know, do what they're doing. There's no end in sight. I think normalization is off the table. It's inflate or die, inflate or default is really what they're forced with doing. And I think that, you know, this will center in the bond market more than anywhere, because at some point, when you talk about, you know, real interest rates already being negative, and, you know, 18 trillion in negative yielding bonds all around the globe, the Bank of England sending out letters to their member banks saying, are you prepared for negative interest rates? Is your software prepared for this? When you talk about the potential for the U.S. to actually go, you know, nominally negative, yeah, I think that these things are real, because the Federal Reserve, when you talk about negative real interest rates and negative nominal interest rates, and a country that's running massive inflation and massive budget deficits, at what point does the rest of the world say the risk in buying a bond, especially a negative yielding bond, by an insolvent government running massive deficits, creating wicked inflation? At what point do they say, screw that? Why would I ever buy? Why not just buy gold and silver? You know, I mean, the knock against gold and silver is that it pays no coupon, it has no dividend, it pays no interest. Well, it beats the hell out of negative interest, and in particular, it's no one else's counterparty risk. And that's why you're seeing maybe big money pull their metal off of COMEX, because the only thing between them and their metal is the counterparty risk of the COMEX. And so if they pull it off and they realize that the Fed has painted themselves into a corner whereby they have to continue to stimulate in order to get lower and lower you know, yields of economic growth, because more and more people are unemployed. And if they continue to buy the back end of the bond market to keep interest rates low, to keep the whole game from imploding, at what point does the rest of the world say, screw the U.S. bond, I don't want them anymore? So the Fed is the only buyer. So they continue to monetize, and heaven forbid they're able to go directly to the treasury window or get their Fed coin, and we see massive inflation. Then you will find no.
That part,
Yes.
remember, has already been taken care of with Janet Yellen in the Fed. So there's.
I understand that, and so that's why the writing is on the wall, Chris. In that's what underscores everything we're talking about. I mean, in that, and that's why I talk about a 4-year progression of the big money, starting with the Bundesbank bringing their metal home. And if you look at every single year since then, something has happened. The banks bringing their money home, the reclassification of gold, the great reset, the big money pulling their money off of the exchanges, off of COMEX. All of these things are happening in a progression leading towards the crescendo. And that is of that environment where negative nominal interest rates, whereby issued by a country that's insolvent, running, massive inflationary policy. At what point does the rest of the world just completely dump and drop U.S. treasuries? And so the Fed either has two choices: continue to monetize, which leads to hyperinflation, which leads to higher interest rates, or back away and just let the market correct, which leads to wickedly higher interest rates. Both roads lead to the same place. So when you realize that the stock, the bond, and the real estate market are all, for the first time, correlated in the same light, opposite interest rates. If interest rates rise, it's a spiritual experience for just about everyone in this country, Chris. And maybe that is why you're seeing this slow drive to pull metals off the exchange, to pull it off of the Bank of England and the New York Fed, to reclassify it, to give the elite the ability to reposition before the Great Reset, whenever that is and whatever that is. And I would argue they've been doing that since 2017. Ultimately, the Fed's balance sheet will have to grow, because you're going to find fewer and fewer and fewer people or entities willing to take their treasuries when they continue to destroy the currency underneath the bond market. So I think it's going to be a very interesting 2021. In some respects, might even be more interesting than 2020.
Yeah, well, we'll find out soon enough. Although I got a different question for you, if I may.
Yes.
So we've seen Bitcoin in the last couple of years went from under $1,000 to 20,000, then back down to 3,000, then back up to 19-ish, high 19-ish at times, 1,000. So let's say you held some Bitcoins. Hey, I might add that it makes you quite well suited to be a silver investor. I mean, you're already trained for it. But I mean, again, if you've just sat through all of that, and now while the price is close to $20,000 again, and especially if you have a nice little chunk of those, I don't know, I would think there's some part that it's like if there was a way to diversify some of that away, take something off the table and still have a similar asset profile, but rather than holding it at the high end of the price, you have something that's still, I don't know, midpoint or lower end of the price, lower to what would seem like a fair value in silver. So what would you say to that person? And also, do you accept Bitcoin as payment for gold and silver?
We do accept Bitcoin for payment in gold and silver. The reason we do is that it is hedgeable on the COMEX. And I would say to people that profit's not a 4-letter word, it's a 6-letter word. And, pulling profit off the table, pulling chips off the table and putting them in your pocket guarantees you win. It's the mistake that almost all investors make, never knowing when to take profits off the table. I will tell you that in some respects, it's how I built a lot of my physical gold position was in mining shares in the 90s when the market was going up with mining shares over a period of time. I would pick a level, and anytime I got 10% above that level, I would pull my profits off and buy physicals with it. It is the way to win. And the people who wrote it down from 20,000 to 3,000 understand that. It's a hard thing to do, but that's why you take little bits off at a time. You don't have to close it all out. You don't even have to take 50% out and play with the house's money or whatever when you doubled it. But take some out on the way up and convert it into gold and silver. And I think that's very wise. I think that's great advice. And yes, we do take it through the BitPay app because we can hedge it. And so I think that while, arguably a lot of people believe Bitcoin will go a whole lot higher, I really don't know what to believe about it, simply to say that it sure has performed well, and taking some of those profits off the table and putting it into gold and silver, especially silver, when you see how it is so undervalued by every metric, is a darn good idea. And we would be happy to help your listeners out with that for sure.
Well, I appreciate that. And Andy, perhaps you can let folks know how they can get more information. And also, let's say Santa is listening this week and he's loading up the sleigh for all those good Austrian-based free market sound money advocates who have stood up to the pressure in the evil empire, Keynesian government Gestapo. And so Santa's saying, wow, there's a lot of good people out there. I'm gonna bring some silver down that chimney. What kind of special can you give for Santa or anybody else who wants some silver this holiday season?
Yeah, so we're going to continue to run. We have 2 specials this week, Chris, that will run to the end of the year. The one that we're running currently with the Arcadia listeners are the $50 bags. And if we don't sell out of those, like we did the Call of the Wild stuff, which I'm glad your listeners were able to grab, that some of the best silver coins I've ever sold. The pre-65 $50 are as attractively priced as anything I've seen this year in silver. And so we still have some left. And if by the time this airs, there are still any of those left, to me, that is as good of a buy for what's coming down the pike as anything I've ever seen, because of the utility that they provide. And at $1.75 over spot on pre-1965 U.S. constitutional $50, I think your listeners will find that's the best price in the country. I also have a good number of assorted refiner Buffalo silver rounds, and we will offer those to your listeners for the remainder of the year until they're sold out at $1.79 over the price of silver. And both of which I think are really, really good to own, because they are both conservatively priced towards the low end of the spectrum in terms of premium, and both offer great utility, whether it be for cashing in and taking advantage of an opportunity or an emergency, or trading or bartering. Heaven forbid we get to that point in a currency problem or a currency crisis. So it would be the pre-1965 U.S. $50 at $1.75 over spot, or the assorted refinery Buffalo silver rounds at $1.79 over, while supplies last, hopefully through the end of the year. Arcadia, Miles Frank. And I want to wish all of your listeners happy holidays and a very happy, healthy new year. And let's hope that 2021 gives us a little semblance of normalcy. And it'd be nice to next year when we do Silverfest, meet somewhere rather than do it online, and get to shake everyone's hands, yours included.
Well, I don't know. Maybe that's why I have some key Arcadian individuals calling places in the Bahamas, seeing about a possible location for a big silver party. I don't know. It's just something I heard that may or may not be happening. So definitely not legal financial advice. Although, Andy, what I can say is that good news, because coming up this week, we had Ted Butler, the great silver manipulation analyst, check in for his forecast of what's happening next year. And to catch that one, just click on the video that is coming your way now.
I'm, just about certain that there's going to be some kind of failure on the big shorts part in silver.